maybe an accountant or a CPA or somebody on the line. The great thing about this type of information that is it's not taught anywhere. You've got to seek it out yourself. You've got to find that and really learn this information, as Patrick and his partner Scott Estel have done and put together this incredible program. So we are officially 60 seconds away from getting logged in, 60 seconds away. And we are in the hundreds of people on the line all across the country. So you are not alone, folks, seeking out this information. And hopefully we can, after this, have Patrick come back and do this again. His schedule is jam-packed, especially going towards the end of the year. And this is the second one that he has graced his presence with us, and we're excited. And we've had just hundreds of people take advantage of this information. So we want to give everybody the opportunity to learn and understand, number one, if you are in Visalus, what you have available. Now all you've got to do is implement it. If you're not in Visalus, this is going to show you why you need to be in and how to implement all of that information and getting yourself properly aligned. So about 30 seconds here, we'll get underway. We've still got people logging in. Hopefully they're getting that correctly. And if you are logged in correctly, once again, you're seeing a black screen that says Tax Strategies and Solutions, America's #1 tax education and tax reduction specialist, Patrick S. James, along with his partner, Scott Estel, former senior trial attorney for the IRS. So about 30 seconds out, and we are going to be underway. Wow, numbers just keeps on as all across the country. Folks, thanks for joining us. This is going to be some exciting information for you, and I know Patrick appreciates it. All right. Well, to be respectful of everyone's time, I know that there's still people out there logging in, and everybody, there's going to be people that are going to be respectfully late, but we want to be on time and prompt for those that have joined us. And ladies and gentlemen, my name is Brian Belville. I'm a 2-star top ambassador with Visalus Sciences, and it's just absolutely an honor to be somewhat of the co-host of the call tonight. The gentleman that you're going to hear from this evening, I have known, believe now going on 13, 14 years, if my memory serves me correct, and just learned a tremendous amount from this gentleman. And it's actually an honor just to be on the line and be able to share the stage, if you will, with someone like Patrick James. And he's actually the CEO of Tax Strategies and Solutions. And he decided that, you know what, he's dedicated his entire career to helping people create and preserve their wealth through the knowledge. See, most people just don't know that this information is out there. And with his marketing expertise, it was absolutely instrumental in launching a tax reduction program that you're here to learn about tonight, so that people with a home-based business can actually understand what they have in their hands just by having that business. And he partnered with someone who is just integral in this system. He's a former senior trial attorney for the IRS. Together, him and Patrick created what they like to call a toolkit to teach people how to take advantage of every single possible tax deduction in order to minimize the tax liabilities and maximize the tax deductions. And most people don't understand that. But I know that most of the people on the line, this was a very special invitation from myself and a lot of the other Visalus distributors out there. And if you're a guest on the line tonight, we're glad to have you as well. This information definitely applies to you, whether you do or do not have a home-based business. You're just going to be able to make the choice of, the intelligent choice of why. And to bring Pat on, in 1997, he actually became the president of a national speaking firm which specialized in financial education. I think this is very important for everyone to understand. Patrick has been a guest on more than 100 radio and television shows talking about, financial expertise. On Newsweek, It's Your Money, which is a New York Times bestseller, and he's spoken at conferences and taught this system alongside of the likes of Alan Greenspan, Donald Trump, George Foreman, Robert Kiyosaki, who is the author of Rich Dad, Poor Dad, Tony Robbins, who needs no introduction, and also Magic Johnson and many, many others. And the reason why I take a minute to share that is just so you know where the information is coming from. Let's give this gentleman our undivided attention. Close the door. Hopefully the children are in bed, the dogs are out of the room, and let's pay absolutely close attention to what this gentleman has to say and bring on the line Patrick James. Patrick, are you with us, buddy?
I'm here, Brian. How you doing?
I'm doing fantastic. Coming out of the holidays, looking forward to learning a little bit more about that one deduction about the children. They're actually old enough. I'm going to start implementing that, so I'm all ears, brother. Take it away.
All right. Well, thank you so much, Brian, and welcome everybody on the call. Happy holidays and Happy New Year here pretty soon in a few days. And what we're going to do, I'm going to just take a little bit of your time this evening and share with you some strategies that can put literally tens of thousands of dollars of your hard-earned dollars back into your pocket. So let's get started here. Before we get going real far, one of the things I want to do is let you guys know I am not a tax attorney. I'm not a CPA. I'm not an accountant. I really don't want to be any of those things. I am a guy who used to be a sixth grade school teacher. I got involved in a home-based business several years ago, and I met a guy by the name of Scott, who's on the screen there. He's the former senior trial attorney for the IRS, and I am going to teach you guys what he taught me, and that was how to categorize your expenses the right way in order to capture all the tax deductions legally allowed by the IRS and by law. So before we get real heavy duty into these deductions, I want to let you know that Congress passes the tax laws. It's Congress, okay? And number two, Congress will never ever pass a law that hurts themselves, obviously. And so all of these things that we're going to be talking about, these are all laws that are in the tax code right now in 2011. I'm implementing them. I know Brian is implementing them, and you guys need to be implementing them also. And the name of the game here is to pay what you legally owe in taxes, but don't pay 1 penny more or 1 penny less. You need to pay exactly what you legally owe. And by taking all the deductions that you're legally allowed by owning your own home-based business, you can lower your taxes dramatically if you know how to do it the right way. So what I'm going to do is show you how to do it the right way and how to capture all of these deductions. With Scott's help, let me show you what happened. I could show you all of my tax returns for the last 12 or 13 years, but that'd bore everybody. We're not going to do that. Here's one from 2008. And in 2008, my total income, now this is just my personal tax return. I also have, I didn't do this at the beginning, but as time goes on, you're going to probably want to think about this also as your income starts going up, setting up different types of entities and LLCs and stuff like that. There's benefits to doing that once you start making over $100,000, $150,000 a year. And the reason I say that is once you make more than about $100,000 to $120,000 personally on your personal tax return, there's something called the AMT, Alternative Minimum Tax, that kicks in. And the AMT, what that does, basically it starts taking away your tax deductions. Even if you have them, you can't use them. But it's on a sliding scale, and it depends on if you're married or single, and there's some other factors involved. But it starts kicking in right about $100,000, okay? And this is on your personal tax return. So I will never make more than about $100,000 on my personal. I have different LLCs set up that generate a lot of income also, but that's not on my personal. Those are separate entities. But what I want to talk to you guys about is your personal taxes right now. So here's my 2008, $101,377, right? Well, I learned how to categorize a lot of my expenses, and the number one tax strategy out there, the number one thing that you have to do is own a home-based business. That is the name of the game right there. If you do not have a home-based business, if you're a W-2 wage earner and that's all you do, there's basically about 12 tax deductions that you're entitled to. One of them is a gambling loss, but you have to have a gambling profit in order to take the loss, okay? There's some weird things going on with that, but bottom line is if you have a home-based business like Visalus, your tax deductions become almost unlimited. And we're going to talk a lot more about that as we go on here. But in 2008, I had about $101,000 of income. Well, after all my deductions and everything, because I own a home-based business, I got a lot of deductions, my taxable income when it was all said and done was $9,350. That was my taxable income, not what I owed in tax, but that's what my taxable income was. Well, when you look at the schedule and everything, bottom line, what I owed in tax was $938. Well, Congress passed a law that talks about earned credit for having kids. So you get a tax credit. There's tax credits available if you actually have kids. And I have a couple kids. Brian has a couple kids and whatnot. Now, a tax credit is different than a tax deduction. A tax deduction basically lowers what your taxable income is. A tax credit, it gets subtracted off of what you owe in taxes. So this child tax credit is good for up to a maximum of $1,000. Well, I owe $938 in tax, and so I get a $938 tax credit because it's good for up to $1,000. So I get a $938 tax credit. Bottom line, ladies and gentlemen, on $100,000 of income, my federal income tax was zero. That is what I legally owed after taking all the deductions, and the deductions came from owning a home-based business. So that's what I'm going to teach you about. Here's a letter that Scott got. Now, Scott is the former, that's the keyword, former, senior trial attorney for the IRS, okay? He left the IRS several years ago and decided to start his own law firm and teach people exactly how to do what I'm going to teach you guys how to do. Well, somebody got a letter, and so they hired Scott, and they obviously have attorney-client privilege, so the name's been blacked out on this thing. But how would you like to get a letter saying, I owe the IRS $84,000? Okay, that'd give you some sleepless nights probably. Well, then it goes on and says, thanks to Scott, after the changes, I owed nothing and received a check for $117. Scott is an incredible person to know. Look at this, account balance before this change, $84,000 due. Then look at that, credit, 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 credit. And then down at the bottom, amount to be refunded to you, $117. So Scott obviously knows what he's talking about and what he's teaching. So it's what he wanted me to tell you guys. He's actually out of the country right now. And but what he wanted me to say to you guys is, and he wrote this, he says, as former senior trial attorney for the IRS, I would like to help each of you save thousands on your taxes by teaching you how to categorize your Visalus expenses the right way. The tax deductions outlined in what Patrick is about to share with you will put tens of thousands of your dollars back into your pocket. So here's where you're going to want to start taking notes and start writing stuff down. According to the IRS, what you need to do in order to qualify for all these different tax deductions, you don't need to have a corporation set up. You don't need to have an LLC. You don't need entities. You don't need any of that. You don't need special business licenses. That stuff that's handled locally in whatever jurisdiction you're in. But according to the IRS, the only thing that you need is the intent to make a profit. Now, some people say, Brian, that, well, don't you have to be profitable 3 out of the last 5 years, or it's a hobby and, you know, there's these different rules and stuff? That's only partially true. The way that it really is you must be profitable 3 out of the last 5 years or show the intent to make a profit. And all of you out there that are involved in Visalus and you're working the business, okay, you're not just a customer. And being just a customer, that's great too, but there's lots of customers, they don't have the intent to make a profit. We're talking about people who have the intent to make a profit. Okay, so that's all you need is something with the intent to make a profit, and your Visalus business is perfect for that. Absolutely perfect. The national average, this is straight across the board. The national average. Some states are a little higher, some might be a little bit lower, but the national average is for every dollar that you don't deduct on your taxes, you end up paying the government 30 cents on that dollar. So if you go and you spend $1 and you don't get a tax deduction for it, it actually costs you $1.30. $1 to wherever you spent the dollar, and then 30 cents to the government. And some of you are probably thinking, I don't do that. I don't spend $1 and send the government 30 cents every time. Well, yes, you do. Go look at your pay stubs. You know, if you look at your pay stub, you look at how much money you really earned and then how much you get to deposit. There's a big difference there. And it's because your employers, every time you get a paycheck, they take that money out of your paycheck for you, right? So, but if you get the tax deductions, you get to keep that money. And there's even a way that you can go in wherever you work and you can change your W-4. Your W-4 is a form that basically tells your employer how much you want withheld out of your paycheck. And the more exemptions you claim on your W-4, the more take-home pay you get. So if you claim 0 exemptions on your W-4, they're going to withhold the maximum amount of money. And so at the end of the year, you probably won't owe any additional. In fact, you'll probably get a little bit of a refund back because you way overpaid. If you claim, 6, 7, 8, 9 exemptions, your paycheck's going to go up, probably $400 or $500 a month, instant pay raise right there. And but the problem is you haven't paid in as much in taxes. So if you're not changing anything in your life, you don't want to do that because come the end of the year, you haven't paid in very much and you don't have any deductions. And so you're going to end up owing money on your taxes at the end of the year. And that is not a good thing. You want to be able to take these deductions and lower your tax liability. That's the name of the game. So it's 30 cents on the dollar. So for example, if, I head out to Virginia or whatever, and I run into Brian Belleville out there and say, Brian, so good to see you, man. I haven't seen you in a couple of years. How's everything going? How's your Visalus business? Hey, how about if I take you to Starbucks and we can go catch up on old times? And he says, sure. So Brian and I go to Starbucks, and Brian, he orders a double grande caramel macchiato with extra whipped cream. I don't know if he'd really do that. I'm just saying as an example here. All right. So, and I'm saying, man, that looks pretty good. So I order one also. Next thing you know, I'm into Starbucks, $10. That is not tax deductible. So it doesn't cost me 10, it costs me 13. $10 to Starbucks, $3 to the government. Well, some people think that, well, if you talk about business, that makes it tax deductible. So let's say that I said, Brian, so good to see you. Let's go to Starbucks and catch up on old times. So we go to Starbucks, and I spend $10. And then all of a sudden we start talking about our Visalus business, okay? Is that tax deductible now? Is that $10 tax deductible? Nope. A lot of people think it is, but it's not. The IRS, believe it or not, ladies and gentlemen, the IRS, they do not care what you talk about. It doesn't matter. What they care about is what was your intent in going to Starbucks. And our intent was to catch up on old times. So, but because I know the rules, here's what I would tell Brian. I'd say, Brian, hey, how about if I buy you a cup of coffee at Starbucks? I need to talk to you about a Visalus business. Well, we get to Starbucks. Even if we don't talk about it, it's still deductible because that was my intent. My intent was to talk about business. So the way the law reads is if your intent is to make a profit, which my intent is always to make a profit, believe it or not. I hope yours is too. Any meals or entertainment, that's really broad. Any meals or entertainment within 24 hours of that business discussion can be tax deductible. And it doesn't even matter what you talked about. What matters is what was your intent in going there in the first place. That's the name of the game. So if our intent was to talk about Visalus, guess what? The score, Starbucks 10, government 0. And I'm also going to show you guys how to categorize all this stuff and how to document it and all that. So don't worry about that right now. I'm going to we'll get to that in just a little bit. Here's another one. Meals are only 50% deductible. It's the meals and entertainment 50% rule. Some of you probably already know that. But any meals and entertainment that you have that are tax deductible, they're only tax deductible at 50%. All right? However, meals that are considered to be catered are 100% deductible. So if I'm having people over at my house, some of my leaders in Visalus or whatever, if they come over to the house and, I go into the kitchen and I went to Costco earlier that day or whatever and got a big cheese platter or whatever with little carrots and all that jazz on it, that would be tax deductible at 50%. However, if they come over and we dial 1-800 and order out something and it gets delivered, that would be tax deductible at 100% because it's considered to be catered. When I travel, and I travel quite a bit, when I travel, in the hotels, if I'm up in my hotel room in the morning, I'll order breakfast. I order room service. That's considered to be catered. If I go down to the restaurant, that's not catered. That's only tax deductible at 50%. But if I order room service, tax deductible at 100%. All these little things add up. Remember, it's 30 cents on the dollar. For every dollar you don't deduct, you give the government an additional 30 cents on top of that dollar. Here's something else that's really, really, really important for you guys, because we're getting down to crunch time here. It's almost the end of the year. This is only good in 2011, all right? 2012, this deduction is going to be gone. And what it's called is bonus depreciation. Now, depreciation, let's say that you had to buy a cell phone or a laptop or whatever it might be, even a car, and you're using that for your Visalus business. You do not get the full purchase price as a tax deduction this year. They stretch it out over several years. So, for example, if you buy a computer for $1,000, you get a $200 tax deduction every year for the next 5 years. It costs you $1,000 up front, but you only get a $200 tax deduction. That's typically how it works. What this administration did that we have in there right now, they passed a law not too long ago that says from 2011, you can deduct 100% on anything that's normally depreciated out. Cars are depreciated out, laptops, cell phones, you know, all kinds of stuff, tools, furniture, printers, appliances, TVs, office equipment, boats, believe it or not, airplanes, anything else that's normally depreciated out, you can deduct the entire amount this year. This year you can deduct the entire amount. That's incredible. That's absolutely huge, you know. So any taxpayer who begins operation of a new business in 2011, or even if you don't begin operation, if you've already had a business, but you have it in 2011, that qualifies also, may deduct all startup costs for up to $5,000 maximum. So if you're starting a new Visalus business, you can deduct up to $5,000 in startup costs this year. That's a $5,000 tax deduction. That's on your 2011 tax return, okay? You don't have to spread the deduction over a 15-year period, which normally you would have to do. So if any of you are on this call and you're even thinking about Visalus, don't think about it, just do it, okay? You can get up to a $5,000 tax deduction for startup costs. So that's what you want to do. That's about a $1,400 paycheck in your pocket if you're on the 28% tax bracket. Here's something else. You can deduct 50.5 cents, we'll call it 50 cents per business mile you drive. Personal miles are not tax deductible. Business miles are. If you're driving somewhere that is related to your Visalus business, which hopefully is just about everywhere, you can deduct 50 cents a mile. And like I said, I'm going to show you how to categorize this in just a little bit. So that means for every 20 miles that you drive, it's about $3.30 in your pocket. Well, you know, I was at the gas station earlier today and I had to fill up and everything, and gas prices have come down a little bit, and I got gas today for $3.27. So for every 20 miles, I basically get a free gallon of gas. So the government is paying for my gasoline because I'm able to convert my personal miles to business-related miles, all because I have a home-based business. So that's a big one also. Here's another one. You can rent your house for up to 14 days per year, and you don't have to report the income. So when some of you are thinking, well, who am I going to rent my house to? Okay. Well, one of the things that we've done in the past is we have a cabin, a waterfront cabin also, and that's where we hold our board of directors meetings sometimes. And if we hold a board meeting out there or any other kind of business meeting, I can rent that cabin, and any money that I receive from the business that I rented the cabin to, which is my business, I get that income. It's tax deductible to my business, and I receive the income, and I don't have to declare it as income. So that is like that's free money right there. So you can rent your house for 14 days per year, and you don't have to report the income. Here's another one. That's a picture of my daughter, Ashley. And not too long ago, she had to go get braces. Well, medical expenses, you can only deduct your medical expenses that are in excess of 7.5% of your adjusted gross income. So, for example, let's say that your adjusted gross income, I'm just going to throw this out there to make the numbers easy. Let's say that your adjusted gross income was $100,000, all right? Well, you can only deduct out-of-pocket medical expenses that exceed $7,500. So the first $7,500 of medical expenses, there's no deduction. All right, that's the way it works. Now, what we're talking about here is co-payments and prescriptions and deductibles and those kinds of things. These are out-of-pocket medical expenses. Braces, all right. So, but there's something called medical reimbursement, and by owning a business, you can actually be entitled to this medical reimbursement plan. And medical reimbursement is 100% tax deductible with no limits. So let me explain what we did here. Ashley's braces cost about $5,000, all right? So out of my business or out of my personal checking account, I paid the orthodontist $5,000. My business checking account then reimbursed me that $5,000. So the business now actually paid for the braces because I got that $5,000 back. The business, because it's medical reimbursement, gets a $5,000 tax deduction because it's categorized as medical reimbursement. And just think of any and all medical expenses you might have. Maybe it's only, a couple $100 a month as co-payments or prescriptions because, if somebody had a runny nose or something like that, I don't know. But you guys, I'm telling you, it adds up. It adds up in a big way. If we wouldn't have done it like that, we would have paid $5,000 for the braces, and then we would have paid close to $1,500 to the government because Ashley got braces. So that would have cost about $6,500. But because we got the tax deduction, we didn't have to pay the government because we got the write-off on it, so it only cost $5,000. Here's the two words that the IRS looks at. These are the two things that they're going to look at to see if you get the tax deduction or you don't. And we've already talked about one of these words. The first word is intent. What is your intent? Why are you doing it? And if you're doing it because you have the intent to make a profit with your Visalus business, you can claim a tax deduction for the most part. The other thing they look at is what you're doing reasonable. I have Ashley, my daughter, I have her clean my office. I have an office in the house, and I also have a satellite office. But my office in the house, she cleans the office. Well, is it reasonable for me to pay her $300 to clean my office in the house? No. She thinks it is, but it's not. Okay? However, is it more reasonable for me to pay her $30? Well, of course it is. So that's one of the things the IRS looks at, is that the reasonable factor, all right, is what you're doing reasonable. Let me show you real quick some tax-deductible entertainment, all right? There are 13 ways to deduct golf. That gentleman on the left in the green hat, that's Scott, the former senior trial attorney for the IRS. I'm the guy in the white baseball hat, and there's another buddy of ours, his name's Joey, and he's in the red baseball hat. But anyway, there's 13 ways to write off golf. And so they both flew to Seattle, Washington. That's where I live, is in the Seattle area. And so they both flew to Seattle, Washington, and we had our business meeting, and it's totally appropriate to, have a little bit of entertainment while you're having a business meeting. And so golf was 100% tax deductible for us. Remember, any meals or entertainment within 24 hours of your business meeting can be tax deductible. The key is at least one person besides yourself has to be at the business meeting and the entertainment also. So it's not like you can have a business meeting and then go play golf by yourself and get a tax deduction. One of the people from the business meeting has to be there with you to capture that one. That's my lovely wife, Carrie, and that is not Seattle, Washington. You can tell by the palm trees. That's actually Hawaii. And we are not on vacation. We're having a business trip. Vacations are not tax deductible. Business trips are. Where can you go to take a business trip? Well, there's actually 30 countries, 30, that the IRS says is reasonable. And the USA just happens to be one of those 30. Well, where's Hawaii? In the USA. So it's reasonable to go to Hawaii and have a business trip. And who gets to decide where you take your business trips? Well, you do. You control that. So we were able to get a tax deduction, and we had a business trip to Hawaii. That's my satellite office right there. It's 50 feet long, has a couple big diesel engines in it, and goes pretty fast. So we, because that is considered an office, Congress never ever passed a law that says your office cannot float. Okay? That law does not exist. So I have an office that floats. The office, tax deductible. So that's pretty cool stuff. What about these things? How can you deduct tuition? Like if you have kids and they're going to private school, or what about school clothes for the kids, or going to the movies, or going to sporting events, or getting piano lessons for the kids, or taking the family out to pizza, or buying. You guys, none of that stuff is tax deductible. You do not get a tax write-off on any of those things. So here's what we're going to do. We're going to take two laws that Congress passed, and we're going to marry them together, and we're going to be able to deduct all of this stuff now. So here's what we're going to do. Okay, the first law says minors can earn up to $5,900 per year tax-free. And then Congress passed a law that says you can deduct the amount you pay your kids for working for you. All right? The cool thing about it is if they're your kids, you are exempt from any payroll taxes. There's no FICA, no Social Security, no Medicare, no nothing. You don't pay any of that if they're your own children. If they're grandchildren or nieces or nephews or something like that, if you hire them to work for you, you're going to have to pay that. If you hire them as independent contractors, though, you don't have to pay that. And they can earn up to $5,900 per year tax-free. So here's what we do. I got a piece of paper on my refrigerator, and I have all these jobs listed there. And I have the kids do the jobs. Then at the end of the month, I take that piece of paper off the refrigerator, total everything up. I write each one of the kids a check, and I take the checks to the bank, and I deposit those checks in each of the kids' separate savings accounts. So now all of the money that I deposit in the kids' savings accounts is tax deductible to me. And they don't have to pay any tax on it because they earn less than $5,900 a year. Well, where do you think we get the money to pay for things like tuition? It comes right out of their checking account, and I got the tax deduction for it. Okay, where do we get the money to pay for school clothes? Right out of their checking account, and dear old dad got the tax deduction for it. You know, where do we get the money to take the kids to go see the movies? Right out of their savings account. In fact, we'll go to the bank on the way to the movie theater, and we'll pull $25 out of each of the kids' savings accounts, and that's enough to buy the popcorn, get the tickets to get in the movie, all that stuff. I even make them pay for my ticket to get in, and it's all tax deductible because we're following the laws that Congress passed. That's all we're doing. Congress said you can pay your kids to work for you, and it's tax deductible for you. And so that's what we do. And then I take that money, put it in the bank, and then we use that money to do all this stuff. We would have done all this stuff anyway. You know, what about swim lessons or piano lessons for the kids? How about taking the family out to dinner? You go to any accountant or CPA out there and say, you know, I'd like to take my family out to dinner. It has nothing to do with business. It has nothing to do with anything. I just love my family, and I want to take them out to a nice dinner. You know, maybe we want to go to pizza or go to steakhouse. Doesn't matter. Go do whatever. How can I get a tax deduction for taking my family out to dinner? Your accountant or CPA is going to say you can't. There's no way. And trust me, folks, there's no little pop-up window on TurboTax that's going to teach this to you. It doesn't exist. What you do is you pay your kids for working for you, and then you go to the bank and you pull the money out of their savings accounts because that was all tax deductible money for you, and you use that money to take the family out to dinner, and guess what? Dinner is now 100% tax deductible because you got a 100% tax deduction on the money that you used for it. Where do you think I get money for birthday presents? Right out of their savings accounts, of course. You know, so you pay your kids for working for you, and it's all tax deductible. And it could be your nieces or nephews or anything else, but if they're not your own kids, you want to hire them as independent contractors, and you need to follow the regulations on doing that. And I'm going to show you how to do that in just a little bit here also. Here's how I do my taxes. I get this thing sent to me, and by the way, it doesn't matter who does your tax return as long as they're qualified. Most CPAs out there, tax attorneys, accountants, they all use the same software. They don't use TurboTax. They use a high-powered industrial software, a commercial grade, and it's between $20,000 and $30,000 that they pay for this software program. They all use basically the same software program. So it doesn't matter who you go to as long as they're qualified. What matters is the information you give them. So you need to learn. It's your responsibility and it's my responsibility to learn what information to give your tax preparer. It's not about who does your taxes. If you go to 3 different tax preparers and they all use the same software and you give them all the exact same information, it's going to turn out the same. Okay? If you give them different information, you're going to come up with a different bottom line. So it's your job to categorize everything the right way, so when you give it to them, they know where to put it in the computer when they fill out the forms, okay, where to input it. So here's what I do. I have Scott's Law Firm do my taxes for me. You don't have to have them do your taxes for you. Keep whoever you got if you like them. But anyway, once a year, about in January, I get this thing called a tax organizer. And it's very simple. He does not want my shoebox full of receipts or any of that jazz. Because you give whoever your receipts, they'll look at that. They don't know what your intent was. How do they know if it's tax deductible? You're not going to give the deductions. So on this tax organizer, basically it says, how much money did you pay your kids for working for you? How much money did you spend on meals and entertainment? How much money did you spend at Starbucks, having business meetings? How much money did you spend on advertising and promotion? How much money did you spend on samples for Visalus? How much money did you spend on this? They know exactly what questions to ask. So all I do is I fill out this form, okay? And then I send it back to Scott's office, and they do my taxes. It takes less than 20 minutes to do it. It's pretty cool. Well, here's what's really interesting, all right? Last year, actually it was this year, it was 2011, almost a year ago though. It was like in February 2011. I called Scott on the phone and said, Scott, I got this tax organizer all filled out and everything, but I'm not going to send it back to you. He said, you're not? Why not? I said, well, I'm going to deliver it in person. Now, Scott lives in Colorado. I live in Washington State. This is going to require an airline ticket. And he said, why in the world would you want to fly out here just to hand this thing to me? And I said, well, basically, I don't just want to hand it to you. I want to sit down for a few hours and go over everything. I want to make sure that I'm doing everything exactly right, and I'm not paying 1 penny more than what I legally owe and not 1 penny less than what I legally owe. I want to make sure that everything's exactly 100% right. And he said, okay, well, when do you want to come? And I said, well, I've already checked the airlines, and Alaska Airlines has a nonstop flight from Seattle to Denver, and I get in at 4 o'clock on Friday. He said, well, that's not going to work. We close at 4:30, Pat. And, you want to spend a couple hours. I'm not going to stay over, and work late on a Friday night. And I said, well, that's okay. I'll just stay over the weekend, and then we can reconvene on Monday morning. How does that sound? And he said, you've been reading my manual, haven't you? Scott, the way I learned all this, you guys, is Scott has a manual that I got from him, and I'll show you how you can get one too if you want. But anyway, I got this information and I went through everything, and that's how I learned most of this stuff. But in there, this is the funniest thing I have ever read in my entire life. The reason it's so funny is because Congress wrote it. Those people we elected, okay, to Congress, they wrote this. Watch this. It says, if either a weekend or a holiday falls between 2 business days, that happens every week, okay? In fact, not too long ago, Thanksgiving was on a Thursday. It's on a Thursday every single year. That's right in between a Wednesday and a Friday. So Congress says if either a weekend or a holiday falls between 2 business days, which happens all the time, the weekend or holiday is considered to be a business day and is tax deductible. Now, when was the last time your accountant or CPA told you that one? You guys, that's in the tax code. It's been there for years, all right? So anyway, what I did is I jumped on an airplane, Alaska Airlines, and I flew to Colorado. Scott picked me up at the airport, and we drove for about 2 hours and 15 minutes up to Keystone and Breckenridge. And we had a business meeting in his car. Can you have a business meeting in a car? Yes or no? Of course. on a train or in a plane, it doesn't matter. In a box with a fox, I mean, who cares? You can have your business meeting wherever you want, right? So we had a business meeting in his car. We went up to Keystone. He has a condominium up there. There's a little town right at the base of Keystone called Dillon. Well, he has a condominium there, okay? So we stayed at the condominium. And what I did is I paid him rent to stay at his condominium. He got that rent money, doesn't have to pay any tax on it. He doesn't have to declare it as income. I got a 100% tax deduction for it. And then he paid for my lift ticket. He paid for the meals. He paid for everything all weekend with the money that I gave him. And he got the receipt, so he got the tax deduction, and he didn't have to declare any of that as income. But he still gets the tax deduction, and I got the tax deduction. That's a win-win all the way around, okay? So that's pretty cool. So where is it reasonable to have a business meeting? Remember I told you a little while ago that there's basically 30 countries where you can go and have a business meeting? Well, in Scott's manual, here's what it says. Here's the 30 countries. There's Baker Island and Barbados and Bermuda and Canada, and there's Guam down there at the bottom. There's Honduras and Jamaica. There's Mexico. We had a business meeting in Mexico the week after Thanksgiving. My wife and I had to go to Mexico. We have some property there now. You know, we've been very, very fortunate. We worked really hard at our home-based business. We made some money, and we've diversified a little bit. We've been able to invest in some different properties now. Well, we have property in Mexico. So we can go down there on a business trip, and it's all tax deductible. And, you know, the IRS doesn't say, well, did you go someplace where there's sunshine and sandy beaches and palm trees and warm water? They don't ask that. Okay, they just go off this list here. There's USA, there's the U.S. Virgin Islands, okay? All of these places. In the U.S. Virgin Islands, there's a place called St. Thomas, all right? We go to St. Thomas once a year for a business meeting. The way we get there is we take a cruise ship. We fly from Seattle to Miami or Fort Lauderdale, get on a cruise ship, and go to St. Thomas. The problem is cruises are not tax deductible. But the cool thing is, the tax code, folks, is over 100,000 pages thick with all the supporting documents and everything. Nobody understands it all. And the best part about it is if you don't like something in it, keep flipping the pages, and pretty soon it will contradict what it just said. So on one page it says basically that cruises are not tax deductible, and then you dig deeper in and it says, if you use an ocean liner, cruise ship, or other form of luxury water transportation instead of a plane, train, bus, or car, to reach your business destination, there is a limit of $680 per day that you're permitted to deduct for transportation costs. So if you go on a cruise and you're using that for transportation to and from a business meeting, you can deduct up to $680 a day. The problem is nobody knows that. So if somebody goes on a cruise and you give that receipt to whoever prepares your taxes, there's no tax deduction for going on a cruise. You have to categorize it as transportation to and from a business meeting. Then, and only then, you would get the tax write-off, and it's $680 a day. That's how important it is for you guys to know how to categorize your expenses the right way. Let's talk about audits just for a minute, okay? This country, this wonderful, great country that we live in, you know, some of the leaders in the past, and this is just my opinion, have not been very fiscally responsible. And we are very, very, very highly in debt. In fact, in the last 3.5 years, we've got an additional $3.2 trillion further into debt. Amazing. Well, just to let you know how much money that is, 1 million seconds is about 12 days. So if you're holding a 12-day-old infant in your arm, that little newborn baby is 1 million seconds old. 1 billion seconds is 32 years. 1 trillion seconds is 32,000 years. And we've gone 3.2 trillion further into debt. The money that the government is collecting right now doesn't even hardly cover the interest on the debt, you guys. It's a really sad state of affairs right now. We're in trouble. Well, the current administration that's in there, if they go and they raise taxes across the board to everybody, upper class, middle class, everybody, all across the board, will they get reelected? Yes or no? Of course not. You know, they can raise taxes on the top 0.5%, of the income earners out there because those people don't vote for him anyway. And so they're not worried about that. But they will not raise taxes on the middle class right now because if they do, they won't get reelected. Don't you think they know that? They're pretty smart. However, they need to generate the income because we're going backwards at a very rapid rate. So what they did, they went to the IRS. This was several months ago. They went to the IRS and said, we would like to give you several billion, with a B, $billion, and we want you to hire as many revenue agents as you can possibly hire. And the way we're going to collect this revenue is we're going to audit as many people as we can possibly audit. That way we don't have to raise taxes. You guys are the bad guys because you're collecting the money, and we're able to knock this deficit thing down a little bit. So don't be surprised if you get an audit notice in the mail because they're auditing a ton of people right now. You know, it's all over the place. This came from CNN Money. More Americans than ever may be subject to unwanted attention from the Internal Revenue Service this season as the government pumps billions of dollars into tax collection. What about this? There's Bloomberg. IRS audit rates almost double for U.S. taxpayers. MSNBC. Deficit could cause more IRS audits, experts say. CBS News. We saw individual audit rates increase, reaching the highest rate in the past decade, said Steve Miller, IRS Deputy Commissioner for Services and Enforcement. Okay, it's incredible. So I need to teach you real quick how to become audit proof. So here's what you do. Okay, this is what I use. This is a tax tracker system that Scott actually developed. He designed this to be used by the IRS agents and when he worked there. And so I got a copy of this, and I'll show you how you can get a copy also if you want one. But anyway, this is what I use. So I took and I scanned in to the computer one of these pages that's inside of here. When I scanned it in, you couldn't read it. You couldn't read my writing because it didn't pick it up right. It made it into like apostrophes and different symbols and stuff. So I went back in and I retyped this in so you can read it. I don't really print that neatly. So I went in and I retyped it in so you guys could all read it. But this was last May. I just picked a day and scanned it in for you. May 17th, I went from my home office to Starbucks. Your business miles start at your first place of business. They do not start at your home. So if you're going to deduct your mileage, they don't start at your house. They just start at your first place of business. Now, if you conduct business at your house and then get in your car, now that was your first place of business. So I always start in my home office. So I went from my home office to Starbucks RT. RT stands for round trip. I met Ralph Nadeo about our medical insurance. It was 18 miles round trip. That's tax deductible. It's 50 cents a mile. I spent $10. That was tax deductible also. And then later that day, I went to Nordstrom's round trip. I had to buy a gift certificate to give to somebody as a bonus. And it was 14 miles round trip. The gift certificate was $200. I gave it to him as a bonus. That was tax deductible. Later on that day, my wife Carrie and I went to a gentleman's office. He's our attorney. His name's Toby, and to talk about some of our real estate contracts. It was 28 miles. And then after we left there, it was about 5 o'clock in the evening or whatever. We were both hungry for dinner, so I took my wife out to dinner. Is dinner we didn't talk about business. We didn't do anything. We just came from a business meeting and went to dinner. Is that tax deductible? Yeah, because it's within 24 hours of the business meeting, and Carrie was at the business meeting. All right? So I spent $79.45, tax deductible. And then after dinner, I took her to go see Phantom of the Opera. Phantom of the Opera came to the Paramount Theater in Seattle. See, there it is, downtown Seattle, Paramount Theater, Phantom of the Opera. We went, and the tickets were $150 a piece. Well, is entertainment tax deductible if it's within 24 hours of a business meeting? Yes. $300 tax deductible. Then we went back to the office. Then the next day I met with a gentleman named Darren Murphy, talked about some web design stuff. And then I had to go to the P.O. box to check the mail. Then I had to go to the bank to deposit the check that I got in the mail. All of that stuff, tax deductible, you guys. Okay? I don't write down any of my personal stuff. All I write down is the tax deductible stuff. The reason I don't write down personal, it's not tax deductible. I don't need to track it. All you need to track is the stuff that's tax deductible for you. So the tax tracker was designed specifically to help you comply with IRS mileage and expense regulations. There's the daily expense and mileage log. There's also a summary book. So at the end of the month, you pull out the summary book, you total everything up, and you fill out this one page. So at the end of the year, you have this little summary book that has 12 pages in it. January, February, March, April, May, okay? You will be 100% audit proof. Everything is totally documented. Besides, how would you like to go into an audit and have the exact same day planner that the IRS agents have? Okay, that's what we're talking about here. Here's one of the last things I want to talk to you about. Congress passed a law a while back that says any money that you've paid in taxes over the last 3 years, you can go back 3 years in time, any money that you've paid in taxes over the last 3 years that you didn't take the deductions because you didn't know about them, you can go back and reclaim the deductions, and the IRS is required by law to refund your money to you and pay you interest on it. And pay you interest, okay? And I'm going to show you exactly what I did. Every single one of you on the call qualify to do this. Every one of you do, okay? Scott has a DVD. Actually, it's a CD. Excuse me. It's a CD, and it's called 99 Ways to Beat the IRS with a 3-Year Review. He goes through the 99 most common things that people have missed on their tax returns, and all you do is you plug this in, and you just make a list of the things that pertain to you. Nobody's going to get all 99 of them. Don't even think that you will. But everybody will get probably 45 or 50 of them. All right? So here's what happened to me. In 1998, you guys, I made about $80,000 of income, and I paid $20,000 in tax. I had my mom and dad's accountant do my tax return, and I paid $20,000. Okay? After it was all said and done, I ended up getting a $5,000 refund. So I'm into the IRS about $15,000. Now, this was back in 1998. And 2.5 years later, that's when I met Scott, and I found out about this CD. And so I did exactly what I just told you guys to do. And what you want to do is you want to go to a website, okay, irs.gov. It's the IRS website. And there's a link on there that says forms, and you click on that, it pulls up all the different IRS forms. There's hundreds of them. The one that you want to pull up is called a 1040X, like the letter X. You see it there on the screen, 1040X. And that's the amended return form. And so what you're going to do is you're going to pull up this 1040. You're going to print out 3 of them because you can go back over the last 3 years, okay? So you're going to do this for 3 years. You're going to listen to Scott's CD. You're going to make a list of all the things that you've missed. And then you're going to go on the website, you're going to pull up this 1040X, and you're going to put down all of those things that you missed, all right? Well, come to find out, my mom and dad's accountant, when he did my tax return, I paid in $20,000. I got back $5,000, okay? My mom and dad's accountant did a perfect job, absolutely perfect. The problem was I gave him all the wrong information. Nobody ever told me what information to give him. But then after I met Scott and I learned what information was relevant, what I was supposed to do, I went back over my tax return and I recategorized everything the right way this time. And turns out I donated $13,730 to the IRS, and I didn't even know it. That's how much I overpaid. That $15,000, I actually overpaid $13,730. Okay, that's how much I paid that I didn't really owe, but I didn't know how to categorize things the right way. So as soon as I found that out, I filled out this 1040X. I want my money back. So I filled out the 1040X, and down here, it's on line 22, it says amount you want refunded to you. Well, all of it, I wanted $13,730 refunded to me. So I got a check back from the IRS. In 1998, you guys, I paid in $15,000. I received back $17,000. Is this a great country or what? Check this out. Not only did they pay me back that $13,000 that I overpaid, but they paid me almost $4,000 of interest. They are required by law to pay you interest on the money that you accidentally overpaid because you didn't know about all the deductions you could take. So every one of you qualify to do this. I did this 2.5 years later, okay? The following year was when I met Scott, and I only paid like $19 in tax that year. I didn't show you that tax return, but I paid about $19 in tax. So I went back over the last 3 years, and the furthest back I could go was on this tax return right here. And so I really only qualified for 1 year out of the 3, because I'm not going to do an amended return for $19. It doesn't make sense. So I did this for 1 year, and I got back $17,000. That is pretty amazing. You guys can do this for 3 years. Go back to the last 3 years and do this. Let's say it's only half as good. Let's say it's not even half as good for you. Okay? Let's say that you only get $8,000 back instead of 17. Well, if you get $8,000 back and you're able to do this for 3 years, that's 8,000, 8,000, and 8,000. That's $24,000 that you're going to get a check in the mail for in the next 60 days. What would an extra $24,000 do for you in the next 60 days? That'd be pretty huge, wouldn't it? That's what we're talking about here. So here's what the average tax savings are every year forever. The people that actually follow this system, Scott knows exactly what it is, because he knows what they paid before, and he knows what they pay after utilizing all these strategies and stuff, because for a lot of people, he does their tax return. But like I told you, you don't have to use them. You can use whoever you want, because they all use the same software anyway, okay? Let's say that somebody's making $120,000 a year. By implementing these strategies, and we've only talked about, 10 or 15 of them. There's hundreds and hundreds of them. But if you're at $120,000 a year, this is going to put an extra $28,000 a year above and beyond what you're already doing, an extra $28,000 a year in your pocket. That's the national average. The reason I highlighted $80,000 is because that's where I was. I was making about $80,000 a year on my personal tax return, and it saved me about $15,000 on my taxes. I paid in about $15,000. I actually got a check back for $17,000, so saved me a little bit more than that. So that's what it is, you guys. And I want you to look on the left-hand side and see where your income is. If you're married, this would be you and your spouse together. And this is gross income, not net. This is gross before anything. And then on the right-hand side, that's how much money you should be saving every single year for the rest of your life, or as long as you're involved in Visalus and have a home-based business, and you start capturing all these tax deductions. So that's what that is. I paid Scott, believe it or not, I paid him almost $4,000 to learn how to categorize all my expenses the right way, but it saved me $56,000 in taxes, and that was just the first year. I've been doing this for 10 years now, and it's absolutely the best investment I've ever made in my entire life. So here's what Scott's program is. If any of you are interested in getting Scott's program, or doing what I do, if you want to do what I do, then do what I do. I'm doing it. Brian's doing it. A lot of the leaders are doing it. And you really, really need to take advantage of this, because you own your own home-based business, and just follow the law that Congress passed. You qualify for all this stuff. Take advantage of your Visalus business, folks. There's a lot more money to be made in your Visalus business than what you even know about just from the tax side, okay? So what Scott did is he put together this whole program to teach you all of these deductions. In fact, hundreds more than what we've even talked about tonight. There's over 100 tax tips and different strategies. There's a manual that goes with all this stuff also. I've talked a little bit about that. But there's a 5 CD set that comes with it, and on the first CD it talks about the IRS and you, then criteria for different tax deduction, gifts that keep on giving, nothing personal, IRS contradictions. That one's pretty dang funny. There's so many contradictions, it's amazing. Talks about your cars and mileage and how to get all that, and commuting calculations, and do you want to buy a car or lease a car or pay cash for a car, and what about lavish or extravagant, what's reasonable and what's not reasonable. Dirty laundry, that one's another pretty funny one that he talks about. How to go to dinner and a show. There's so many, the medical reimbursement plans on there. If you want to hire your kids, hire your spouse, hire your niece, hire your nephew, it's all on there. Everything's there that you need. There's all this stuff, whether or not you have the intent to make a profit or not. What about a home office? A lot of people say that taking a home office deduction is a red flag. No, it's not. 20 years ago it was, but it hasn't been a red flag for the last 13, 14 years. Most people out there have some type of a home office or a den, So that is not a red flag one single bit, and every one of you need to be taking that deduction. So he goes through all that. He also talks about different types of retirement plans and ways to set them up to maximize the tax ramifications and everything. One of the other things that you're going to get is this complete tax tracker system. This is the day planner he developed to be used by the IRS agents. This is what I use. So you're going to get one of these, all right, with the tax tracker system and the I forget what I'm even saying now. The booklet, the summary booklet. That's what it is. So you're going to get the summary booklet along with that also. There's also a couple bonuses that he's going to give you. The first bonus is tax tips for 2011. So any of you on this call that are going to want to get this, hopefully it's all of you, you really should, but your taxes are not due until April 15th. That's going to give you plenty of time to listen to this and get things set up and structured the right way. So you're going to, in 2011, you guys, every one of you on this call should probably save $5,000 to $10,000 to $15,000 on your taxes just from this one DVD right here. All right. Free bonus number 2, you're going to get this CD that's 99 Ways to Beat the IRS with that 3-year review. So you can go back over the last 3 years, reclaim any deductions that you might have missed, and fill out that 1040X, and the IRS will send you a check and you'll get it within 60 days. That's a huge one. I got a check for $17,000, you know. I know people that have gotten checks for double that. Here's free bonus number 3, and this is absolutely huge. I can't even believe he's doing this. He does monthly coaching calls. He charges about $600 per session to be on these calls. Any of you that decide to get this tonight, he's going to give you this free bonus that you're going to be able to be on all of his coaching. He does this the first Tuesday of every month. Now, in January, he's going to do it the second Tuesday of the month because the first Tuesday is right after New Year's. So he's going to wait till the second Tuesday. And you guys are all going to be invited to be on this. And what it is, it's Scott teaching some of these strategies for about a half an hour. And then he opens the phone lines up to questions. And you're able to have all of your tax questions answered every single month by the #1 tax attorney in the country. Not some paralegal, but the tax attorney himself, okay? Ask him any questions you want about your Visalus business and how to do it and what to do and how to deduct this and how to deduct that. He'll go over everything for you, and you can ask however many questions you want every single month. You guys, that in and of itself is worth it, okay? So what you need to look at, again, look at this chart, see how much money it's worth to you every single year. And what I'm going to do is I'm going to blow your socks off right now because Scott, being the end of the year, is giving his program basically away almost for free, okay? Normally, this whole entire program, everything that I've talked to you about, everything, normally it's about $1,000. It's $999. Because we're coming up to the end of the year, you guys are going to get the 2011 version because your 2011 taxes are what's coming due here. This is what everyone on this call needs. This is where you're going to start saving money. For 2012, you're going to be able to be on the conference calls and stay up to date every single month and get all your questions answered. But he has a few of these 2011 tax deduction business kits left. And he's said that he knows Brian and he knows myself very, very well. And he said, you guys, here's what I want you to do. When you do that webinar, I want you to sell these things for $299. Tell everybody that I'm going to sell them for $299, and that's the final deal. So if you guys, normally it's $1,000. By the way, this is tax deductible also. This $299, that's tax deductible for you. So if you order it now, you're going to get an extra $300 tax deduction on your taxes. The way you order, and they're going to leave this website up until they're all gone. And there's not like an unlimited quantity of these things either. These are this is the end of the year, and this is the special deal. And as soon as they're gone, they're gone. So you need to go to www.taxdeductionsmadeeasy.com. And if you go there, you'll come up to a page and you click on it. It'll say you want to buy. You click on that, and then it's going to take you to a PayPal page. And you can either pay by credit card or you can pay by PayPal. You have a choice. You can pay either way. So that's basically what the whole program is. You guys, every one of you on this call, this is a no-brainer. This is absolutely, positively, 100% a no-brainer deal. You will save 10 times that amount of money on your taxes this year. So I highly recommend that every single one of you on this call do it. I've done it, and the reason I was able to save all that money was because of my home-based business. All of you have a home-based business. If you don't have one yet, get involved with Visalus so you can have a home-based business and start capturing all these deductions. So anyway, I really, really appreciate everybody being on the call. I'm going to see if I have some questions here, if I can do this. Okay. I'm trying to find these questions. I can see them here, but all right, let me go up. Let me see. There's a whole bunch of questions. Business, you now just got a $62,000 tax write-off. The money that you borrowed to buy the car, you don't declare as income. So if your taxable income was $62,000 and you just went and bought a brand new car for $62,000 and you get a $62,000 tax write-off, your taxable income is now zero. We just zeroed out your taxes for 2011. Okay? That's amazing. That's pretty good. Visalus logo on a vehicle, and put something on your license plate that says paid for by Visalus. Does that make your car tax deductible? No. The sticker that you put on the car is tax deductible. Okay? The license plate frame that you paid $3.99 for, tax deductible. That does not have anything to do with the vehicle. The vehicle itself is tax deductible only based on the percentage that you use it for business. Okay? If you put stickers on it and you drive it around and the stickers are on it 100% of the time, that does not make your car 100% tax deductible. Absolutely not. The stickers are deductible, not the car. If you use the car 100% for business, then it's 100% deductible. If the car weighs over 6,000 pounds, you can deduct the entire amount of it under this bonus depreciation this year. If it weighs less than 6,000 pounds, then it does not qualify for bonus depreciation. It gets depreciated out over several years, so you get like a $3,000 tax deduction or whatever it is every year for the next several years. Okay? Can Canadians use this? Absolutely. Revenue of Canada is about 98% the same as the IRS. There's a few really, really small differences. There are hundreds, if not thousands, of people in Canada that have Scott's program. Scott works very, very closely with an accountant up in Canada, and so they go back and forth quite a bit. And so, like I said, probably 98, if not 99% of all of the material in here is applicable to Canada as well. So if you're from Canada, definitely you can use this, and it'll help you out a lot. So what about military? Can we still take that? Absolutely. If you have the intent to make a profit, it doesn't matter what else you do. It says, I joined the meeting late. Are you recording it again? How young can a minor for hire be? What's reasonable? Is it reasonable to hire your 3-year-old to do all your filing for you? That's not reasonable. Okay, there's that TV commercial on TV. It's so cute. It's I think it's E-Trade or Scott Trade, one of those, where it's that little baby sitting in the high chair and talking about the investments and all that kind of stuff. Or what about the baby that's inside of the tire for Michelin tire commercials? Okay, those babies get paid. Absolutely, they get paid for doing those commercials, big time. Okay, so there's no real age. It's what's reasonable. And so, like my daughter Ashley, who's now 16 years old, she does a lot of my filing and stuff, but that's reasonable. She's a 4-point student, and she's in 11th grade, and she knows how to do that kind of stuff. So You can do that. What if you have already taken a loss 3 years in a row? What's the best way to get tax benefits now? It doesn't matter how many years. Let's look at this. You must be profitable 3 out of the last 5 years, or it's considered a hobby, or you must show the intent to make a profit. There's a little old company up here in Seattle, Washington called Amazon.com. You might have heard of them. Their first 7 or 8 years, whatever it was in business, they only posted a profit like 1 quarter out of 7 years. Are they a business or a hobby? Well, they're a business. Why? Because they're showing the intent to make a profit. All you need to do is show the intent to make a profit. That's the name of the game. So where do I get cheat sheet to fill out to give to an accountant? Talk to your accountant, okay? The place that I use Scott's Law Firm, and they have a thing called a tax organizer. So just talk to your accountant and ask him if he has any of these tax organizers or anything, but you still need to know what you're entitled to. That tax organizer is not going to do it for you, okay? You need to be able to categorize your expenses 365 days a year, because if the IRS ever audits you, or I should say when they audit you, if you need to have your ducks in a row. It's not about just getting a form from a CPA or an accountant and filling it out at the end of the year and turning it in. That doesn't prove anything. Anybody could put anything on a form, you know? That doesn't mean anything at all. It's your job to track this and to categorize things 365 days a year. Taxes are not April 15th. Taxes are every single year. In the packet, does it come with the 2012 tracker for expenses? Yes, the tax tracker that's going to be in these packages, you guys, it's a 12-month system, and you can start whatever month you want. So it's not specifically for 2011 or 2012. It's for a 12-month period. So you can get it, and I would recommend if you get it, start it January 1st, because that's the beginning of the year, and that makes it real simple and easy. So you can use it for whatever 12 months you want. How old do your children have to be? We talked about that. Does the minor actually have to file if it's under $5,900? Whoops, let me see here. Depending on how much they make, they might need to file a tax return, and it also depends on how they earned the income, okay? Do you need a separate business checking account to do the medical reimbursement? Yes. You do not want to commingle funds. Every single one of you in Visalus, you need to have a Visalus checking account that you only use for your Visalus business, and it's not personal. Then you have a personal one that's all your personal stuff. But do not commingle funds. That is the biggest thing in the world that can get you in trouble when you get audited. So you definitely want a separate checking account. How much can I use for a write-off if I've just signed up? You can write off up to $5,000 of business startup expenses. It depends on how much startup expenses you have. You cannot take a deduction greater than what you've spent because you didn't have the expense. So let's say you got involved in Visalus and you came in at one of the top levels, you spent $900, $1,000, you bought a bunch of samples, you did this, you did that. You could have, $1,500, $2,000 of startup expenses pretty easy. All of that would be tax deductible. It's good for up to $5,000 or what your actual expenses are, whichever is less. Is it best to file joint or individual? It depends on, you have to look at the schedule and see which one gives you the best tax rate. Okay, if you use an accountant or a CPA, they should do that for you. Is that total $5,000 for my job and another, or just the one? The $5,000 business startup expense is per business. Okay, so if you have a job, it doesn't make any difference. You still started a business. You get up to $5,000 of business startup expenses. Says they say to become a product of the product. So are our monthly kits deductible? Yes. Can you take all of these deductions if you have more deductions than income? Yes, absolutely, positively. In fact, if you have more deductions than income, it's kind of interesting because your deductions carry forward for up to 20 years. So you can actually carry forward for up to 20 years. So they're going to knock us off this webinar. There's still some more questions and stuff. You guys, if you have questions, what I want to tell you, get this package. It will answer your questions. If your questions are not answered once you get the package, you can call the, I call it the hotline. It's the private 1-800 number that you're going to get. You can call that. You can talk to them. They'll be able to answer your questions for you. I'm getting the beep here that we only have about 30 seconds left. So I just would really like to say thank you so much to everybody for being on this call. Extremely beneficial information, I'm sure, for everyone. Learn how to only pay what you legally owe. You don't need to pay more than what you legally owe. This is absolutely the lowest price you will ever see on this ever. The first of the year, it's going back up to $1,000. As soon as they are sold out, the website is coming down. So if you log on to the website and it's not there anymore, that's because they're all sold out and they're not available. So good luck to everybody. Happy New Year. May 2012 be the most prosperous year that you have. And be sure to only pay what you legally owe and not one penny more. Thank you so much, and good night.